structural reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the largest structural issues. The relationship is very, very good. I'll speak to President Xi maybe at the end of the week.
President Trump hailing a total reset in the tariff tensions with China, with both sides claiming victory as they agreed to slash tariffs. Live from Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Investors are jumping back into Asian stocks led by Japan on optimism that the US-China trade truce marks the end of an all-out tariff war. In China, there is relief as President Xi's defiant stance against Trump's tariff onslaught pays off. The US seems to have met almost all of Beijing's demands while also reducing levies. So, should the world fear China? We speak to the author, Zhou Bo, on why Beijing is confident it can go toe-to-toe with Washington in a trade war and win. And Philippine voters deliver a blow to President Ferdinand Marcos with the Duterte clan and its allies outperforming expectations in midterm elections. Our top story, President Trump hailing a total reset with China after weekend talks in Switzerland secured a temporary reprieve on tariffs for both sides. Trump also says China will remove non-monetary barriers to U.S. imports, with Beijing confirming it will suspend non-tariff countermeasures imposed since April the 2nd. That's seen as a reference to 7 rare earths that were added to China's export control list. Trump also suggested he'll speak this week with Chinese President Xi Jinping. Treasury Secretary Scott Bessent told us more about the administration's strategy.
China was the only country who escalated their tariffs in response to our reciprocal tariff level. So that resulted in an unfortunate escalation. So we now have a mechanism to deal with that. Neither side wants a generalized decoupling. The U.S. is going to do a strategic decoupling.
And amid a cooling in U.S.-China tensions, Asian stocks are mostly extending gains, climbing to the highest since early October. They're tracking the rebound in U.S. stocks as the Buy America narrative returns. Bloomberg's Avril Hong also returns from her vacation across all the moves for us. Avril, at least the optimism for now.
Yeah, I think it's really this turnaround in sentiment that we've been seeing, right? So mostly risk on for now, to your point. Japan, Taiwan, those are the markets that are leading gains today. But on the Hang Seng, that reversal may be reflecting some skepticism. But note as well that just a day ago, it was the biggest jump since early March on the Hang Seng. Now, perhaps the clearest sign overall of this escalation overhang that's been removed for markets is in the Chinese yuan signals. Look at how the yuan fixed today by the PBOC for the first time in more than a month was lower than the 720 level. And it's helping the Chinese offshore renminbi to rally, but also helping other Asia FX as well. Now, flip the board, that concern, I think, for markets is helped along by, if you take a look, the NASDAQ 100 futures. It is showing a bit of a reversal, but this is also a market that just a day ago re-entered a bull market, and this is not far from after it plunged about a month from its 20% plus from record high. So certainly a turnaround in sentiment there. Flip the board again, I just wanted to highlight, amid all this, there are still those concerns about risk. Some already pointing out that when it comes to U.S. stocks, it's not fully priced in the slowing in earnings growth potential, given how there could still be these tariffs eating into growth for companies. Keep in mind as well that a 90-day reprieve is not a lot of time for the US and China to iron out their differences. For now, we are seeing stocks mostly showing that risk on that is sapping demand for the havens, including gold, including US Treasuries as well. We are seeing a bit of a pickup on the 10-year, but note that the yield there is still about the highest in a month, Haas, amid the cooling in US-China tensions.
Amazing to see VIX below 20. Of course, it rose as much as 50. So in terms of trepidation in the market, that's dialed down pretty much. Avril Hong, we thank you so much for that. And the optimism we're seeing across markets is underscoring Chinese President Xi's successful strategy to stand his ground against Trump. Beijing appears to have secured most of its core demands in the first round of negotiations, as the U.S. agreed to a dramatic cut in tariffs to 30% from 145%, while removing the elevated reciprocal levy from China as well. The U.S. also meeting Beijing's call for a point person for talks by setting up a mechanism headed by Bessent. As Tribune China puts it, the U.S. backed down. Speaking in Beijing to leaders from Latin America, President Xi said there are no winners in a trade war.
There are no winners in tariff wars or trade wars. Bullying or hegemonism only leads to self-isolation.
Our next guest has just written a book titled Should the World Fear China? That's a collection of essays unpacking China's own view of its role in the world today. Let's get insights from Zhou Bo, a retired senior colonel in the People's Liberation Army and now senior fellow in the Center for International Security and Strategy at Tsinghua University. Bo, good to have you with us. We heard Xi Jinping saying no winners in the trade war and the tariff war, but in the first round of negotiations, it does seem that China did win. This is a massive win for China.
Well, I do agree with you, Haslinda. Well, because Trump actually has backed down, so therefore, I believe China has really won this tariff war for the first round. Yeah, the point is that China has made it quite clear that it will fight to the end. So therefore, China is the only country that has actually responded most aggressively to Trump's war over tariff. Actually, it's not the only area in the economic field. Militarily speaking, China is also the only country that would challenge America's freedom of navigation operations. Yeah, for example.
Well, you got to wonder how much leverage China can get from the first round of negotiations. How will it position itself in future rounds of negotiation?
Well, it's very simple. You see, Haslinda, if a big power tries to bully a small power, most probably it will succeed. But given that China's economy is so close to that of the United States, and in terms of PPP, China actually is the largest economy. So therefore, this kind of strategy of exerting maximum pressure on China would not work. This is just a common sense, right? If you just want to bully a small country, like you know what has happened, Vietnam, well, Vietnam could just give in go quickly. But on China, a country of this massive size with so many leverages, yeah, be it mineral or EV cars or so on, all these kind of things. So it's a common sense that Trump will not get to where he wants to. So he talked about a reset the relationship, but I believe he actually reset himself.
Talk to us about the reset. What's your understanding of that reset in relationship between the two countries? How might China play that?
Well, I think reset actually starts from the American side. Yeah, it has a reset. It's a narcissism. It's a mentality. Yeah, it's a strategy. And China is responding. But I also believe, of course, with the door open for negotiation, the two sides definitely will continue to talk about it. And I'm very, very happy to know that they're going to have a different working group for talks, so on and so forth. This reminds me of what happened during Obama administration, the so-called strategic and economic dialogues, where there are so many baskets. Of course, this won't be the case, right? But this is the beginning maybe over a new area between China and the United States. The significance is not only economic field. You see, I think compared with Trump first, yeah, I mean his first first term, China actually this time is becoming more confident, and this will actually invite a lot of ramification and significance to our relationship in the future. Briefly speaking, China will be more brave to face any challenges posed by the United States wherever they are, whenever they are.
Bo, I'm trying to understand if anything has changed fundamentally, especially in the way China thinks and, its role in this U.S.-China dynamic. I mean, we heard from Trump that, China has agreed to open up the country, its economy to U.S. businesses. Has anything changed at all?
Of course, a lot of things have changed fundamentally. First of all, Chinese leader would say that this is changes in a century. But what does that mean? The changes, of course, are not seen in last century. But you can argue that in every century there are so many changes. In this century, however, the biggest change is that China is getting stronger, and that is the most important part. And then the question is the United States declining or not? The U.S. would not be happy if you described it as in decline, but if you say they're in relative decline, they have to admit. But to think that American economy is half of the whole world after the Second World War, now it's only a quarter. And who is the declinist? Actually, the largest declinist is Donald Trump himself. Because during his first term, before his first term, he described the United States in a carnage, and he's the man to lead America great again. So he actually is making use of this kind of decline mentality, and he became American president. So I think the strength actually has shifted. Globally speaking, the world is moving towards the Asia-Pacific or Indo-Pacific, whatever you call it, because the conclusion, even by the West, of the Munich Security Conference, is that not only the world is becoming less Western, but the West itself is becoming less Western. And the theme of this year's Munich Security Conference is multipolarization.
But, Bo, I think there are lots of people out there as well who hold a different view that the U.S. is not in decline. And if you take a look at the markets, for instance, the concept of U.S. exceptionalism continues to be a theme. And they say that the U.S. economy remains pretty strong. Indicators suggest that as well. I just want to take a look at what you can expect in the next 90 days. We talk about how, there's been a suspension of those tariffs for 90 days. What do you see happening? Because when it comes to the issues that need to be ironed out, like semiconductors, like technology, these are really complicated issues.
Well, I hope that Donald Trump can honor his words. That means he will just call President Xi. Yeah, it is he who would call President Xi, and rather the other way around. And then, of course, there's a working group that will start to work. And I believe 90 days are long enough, so they can really work out a lot of deals. By and large, I believe this kind of deal eventually would like a balanced deal, because neither side can afford to lose face. So eventually we come to the starting point, more or less. But on the new ground.
As it stands now, can you see both the U.S. and China coexisting on an equal level?
I think so, because this has to be the case. You see, the best point probably is for the United States to give up this kind of notion that the U.S. is indispensable, is a city up on the hill, because this would actually create a kind of narcissism. But when this narcissism is found nowhere, they start to panic, they start worrying, and they start to look for enemies. But if you believe that, Western civilization, like Chinese civilization or Asian civilization, is but only one civilization, then you just would remind yourself, how could I just coexist with the people of other civilizations? And this is the basis of coexistence.
Talk to us about how you're assessing what's at stake for both sides, bearing in mind the compounding implications of this relationship.
Well, this is really a big question, yeah, because I believe what will make China-U.S. relationship different from the U.S.-Soviet relationship during Cold War is that we have to establish a kind of new equilibrium. This equilibrium would not be, parity of nuclear weapons as found during Cold War. It must introduce some new areas such as AI, cyber, and outer space. In these areas, the difference between the two sides is not very big. And the good thing is China and the United States are not enemies. Yeah, we may not be friends, but we are described as by the United States as competitors. But competitors are not enemies. So actually, we have a better ground for coexistence. I think this is what we will have to manage. People say, well, whether we have entered into a new Cold War or not.
Right.
Well, we don't know. Why we don't know? Because we're looking into the future. We don't know in the future it will be a hot war or Cold War. Why did we have the so-called Cold War? During the Cold War, actually, every day people were preparing for hot war. And when finally they signed with Leaf, okay, what happened was about a Cold War. So that means when they look back, they concluded it's a Cold War. So we don't know what lies in front, whether it's hot war or Cold War.
We'll talk about that hot war just a little later. Hang tight. More ahead with Zhou Bo, Senior Fellow at CISS Tsinghua University. Still ahead this hour, Philippine voters deliver a blow to President Ferdinand Marcos Jr. in the midterm elections. We'll be speaking to the De La Salle University Institute of Governance on the implications of the results. Keep it here with us. This is Bloomberg.
This is certainly not the era of war, but this is also not the era of terrorism. Zero tolerance against terrorism is the guarantee for a better world.
That was Indian Prime Minister Narendra Modi in his first public comment since last week's Indian military strikes on Pakistan. He said that India won't hesitate to use force to neutralize terrorist camps in Pakistan, calling it a new normal in relations with its neighbor. Now, meanwhile, Pakistan's claim to successfully fend off some Indian attacks and even claiming to down one of India's prized Rafale jets have put the spotlight on Chinese weapons being used by the country in the conflict. Shares of Avic Chengdu aircraft, for example, which makes J-10C fighters used by Pakistan, have soared over the last few days, along with other Chinese defense stocks. Take a look where we are in terms of that one-week performance. Avic Chengdu up by a massive 50%, along with Aerospace, Nanhua Electronic. It is up by about 70% in that time frame. Let's bring back Zhou Bo, Senior Fellow at Tsinghua University and retired PLA Senior Colonel. Bo, really, the conflict between India and Pakistan, front and center for China for how it sees its military might perform in real time.
Well, I think this is a God-sent opportunity for people around the world to know Chinese weapon system could be at least equally lethal, as some other Western weapon system. The problem with Chinese PLA is that there is a peace deficit. Yeah, that means that China has certainly enjoyed peace for over 40 years, but at the same time, we do not have a chance to test whether our weapon system would work or not. Everybody would know, even from a Tiananmen Square parade sometimes, about how many new weapons China has developed, but China doesn't have a chance to test these weapons. So for the first time, the last 40 years in air combat, between two peer combat aircraft, Chinese missiles has downed, the best aircraft of the Indian Air Force. Of course, there is an argument as to how many, Indian aircrafts were really shot down. But I believe, and I think most of the people around the world would believe that this time, Chinese weapon system has really performed brilliantly.
Talk to us about the significance of that. How much of a milestone is that, if it is true that China's J-10C jet did down the Rafale jet? I mean, what's the significance of that?
Well, you can just imagine, okay? The J-10 actually is not the best combat aircraft of the Chinese Air Force. Yeah, with J-10s, there are a lot of other combat aircrafts which are equally good as J-10. But above J-10, there are J-20, right, which is much better than J-10. And even in December last year, we have on the same day test flight 2, what people described as the 6th generation stealth combat aircraft. Remember, these 2 aircraft are tested on the same day, but they were produced by 2 different Chinese aviation companies. So you can imagine where we are now. And this is only about Air Force, right? About Chinese Navy, we were seeing the same thing. Not only having the largest number of ships, but with many other ships with modern technology, such as the magnetic catapult launching system on China's amphibious landing ships, for example.
The thing, though, Bo, China is stepping up in terms of its commitment to modernizing its military. At the same time, the U.S., it's maintaining its own pace. Talk to us about the pace of this modernization in China's military. When you take a look at military spending, I mean, according to some estimates, at least because there's a lack of clarity, in PPP terms, we're looking at $540 billion. That is still about just 60% of what the U.S. is spending. So it is still behind.
Yeah, of course, China's spending is very moderate because it is sustainable. It has been always less than 2%, most of the time around 1.5%. But because China's economy is growing, so even this 1.5% would actually be growing. Yeah. So and this lower than later standard military budget tells a lot about China because in international relations, defense budget is one of the things that would not lie. It tells the best about what you think about yourself, about your competitors, or even about your environment. So China's confidence really matters a lot for not only for China, but also for this region. It also shows that China is not panicking, in its relationship with the United States. And I believe, with conventional weapons of China ever improving its quality, and the only possible scenarios of conflict between China and the U.S. can only be South China Sea or Taiwan Strait. The timing is on the Chinese side.
Do you see a realignment in the region when it comes to China's military exports? And I'm just wondering how countries in this part of the world are viewing, Pakistan using China's military weapons and how they might be assessing interest in China's military.
Well, Haslinda, let me tell you very simply. In the future, there are only 2 systems. American military system and China's military system. In between, there is a French system and Russian system. So right now, China ranks 4th in terms of arms sale. But you see, Russia's arms sale had dropped to half of what it was before the war. Yeah, so it's a sharp decrease. And the French's aircraft this time did not perform well. And just look at China's EV cars, how China's EV cars are sweeping the European market. So in the future, there are only 2 markets, American military system and Chinese military system. And the Chinese military system, China's arms sale would be quite popular in the global south. This is my conclusion.
Bo, thank you so much for your insights. Zhou Bo, Senior Fellow at CISS Tsinghua University. Now, still to come on Insight, Treasury Secretary Scott Bessent tells us all about Washington's plan of action on trade with China. Plus, AXA investment managers will be joining us to talk market strategy as the tariff war hits pause. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. U.S. Treasury Secretary Scott Bessent says reciprocal tariffs on China should not go below 10% or above the 34% set by President Trump on his so-called Liberation Day. He also told us more about Washington's broader strategy when it comes to trade with China.
Neither side wants a generalized decoupling. The U.S. is going to do a strategic decoupling in terms of the items that we discovered during COVID were of national security interest, whether it's semiconductors, medicines, steel. So we still have generalized tariffs on some of those, but both sides agreed we do not want a generalized decoupling.
Just to build on that, as I listen to you, do you consider the new levels as a ceiling or a floor?
Well, it's obviously a floor that they are now with everyone else who did not retaliate. So the levels have come down to the pause level. And what I would say is 34, which is their assigned April 2nd level, would be a ceiling, which is what I went out and told people on April 2nd, which is why I was surprised market participants panicked, because we had capped the upside for every country, and if they didn't retaliate. So this unfortunate turn of events happened because of retaliation, but now we have a process in place to avoid escalation like that again.
Secretary Bessent, just to build on that, are you saying that tariff rates will only go up from here if this really is a floor of 10% on the Chinese side and 30% on the U.S. side?
I'm not saying that they're going to go up, but it would be implausible that they would go below 10.
And that was U.S. Treasury Secretary Scott Bessent speaking with Bloomberg's Jonathan Farrow and Lisa Abramovich. Let's do a check on U.S. futures. Under pressure, investors possibly reassessing what that 90-day suspension of trade tariffs would mean. We saw a jump as well yesterday. NASDAQ more than 4%. The S&P jumping more than 3% today. We're seeing pretty much losses across the board as investors continue to reassess the trade situation. We have the S&P futures currently down by 0.3%. The Dow Jones futures also lower by as much. Let's do a check on how markets are faring. Joining us now, Ecaterina Bigos, CIO for Asia ex-Japan Core Investments at AXA Investment Managers. Ecaterina, I mean, how are you assessing market sentiment right now?
Well, it's certainly positive that we've seen this de-escalation or truce between China and the U.S. It's positive. Again, it gives the markets a little bit of breathing space. It gives corporations breathing space to reassess the situation. So certainly market has taken that positively. We've seen a recovery pretty much across the board, with the exception of credit. I would say that's a little bit slower. But on equities, I would say markets pretty much pare back all the losses that were obviously post the announcement and post the escalation with China. So certainly positive. But as we go forward, as we heard earlier, it's unlikely to see a decoupling of the two economies, but it's going to be a strategic decoupling. I think we're going to see a lot more. The trade deal will have a bit more details in other parts where the decoupling is going to happen. So most likely we're going to see consumer goods being left as it is, or at least being less subject to tariffs, but places like semiconductor technology, pharmaceuticals, those are certainly going to be subject to assessment in the trade deal that is going to come through hopefully in the 90 days.
So is there too much optimism? We have the likes of Goldman raising its target for the S&P for the year on the back of the tariff reduction.
Well, I think this is certainly the tariffs and the escalation that we've seen, and certainly we've seen the 90 days put in place to other partners. Then now that pause for China that gives scopes for companies to operate, to drive their earnings forward. And if we can look at the earnings season, it hasn't been as negative. We've seen some companies beating expectations. Parts of tech has done fairly well. And as we go forward, suddenly this pause and hope that this will come to a trade agreement that will be beneficial for both parties, that will lead to the cycle to continue, that positive cycle that investors were seeing through when the administration took place. And certainly there are some hopes as well that there will be additional pro-growth measures that were talked through the administration, things like tax cuts and some the regulation, which are still in scope for the administration to put in place. So I think the picture looks a lot more positive. And the other part as well, we have to look from a fundamental point of view. The U.S. corporations are in a very good space, and again, this pause and a positive momentum potentially of resolution of the trade tensions give them additional, hopefully, momentum and earnings recovery scope.
Well, you talk about earnings recovery, but tariffs will eat into companies' earnings, and that actually counters the argument that you just gave us.
So, I mean, again, you have to look at the spectrum of companies large. Not all the companies are subject to tariffs. And we've said in the previous sessions, of course, that the onshore companies or companies that tend to have a lot more operations onshore will stand to benefit. And obviously, when we see this rally or the recovery that we've seen, the companies that sold off during that initial trade tension were obviously companies that are exposed most largely to external supply chains that are most exposed to consumer. And we've seen a recovery of those as a consequence of pulling back of those tariffs. Now, the companies that are onshore focused, they still stand to benefit from increased investment in the U.S., from the tax cuts and potential deregulation. So that picture doesn't change. What it changes, it's certainly a potentially additional positive spin on companies that were a lot more levered in the supply chains and trade partnerships.
Does it change the prospects for Chinese stocks? We know that when tariffs were imposed, there was a lot of expectation of stimulus, big bang stimulus in a way, from the PBOC as well as in terms of fiscal measures. I'm just wondering whether now there is less expectation of that and hence Chinese stocks become less attractive.
Well, I think that there are three pillars that I think are driving markets at the moment. Tariffs is one, and I think it's the center of focus of a lot of investors. And then the other is fiscal policies, and this is not just for China. We've talked about Europe in previous sessions. And the last one is the tech innovation. So these are the three are driving, I would say, somewhat outcomes that potentially maybe not intended at the beginning of the year. And when we look at tariffs, obviously the relief of tariffs and hope of resolution, it's a positive for markets. I think it's a beta rally. Then you have a fiscal or scope for fiscal support. I think for China, despite the tariffs that were put in place, the escalation of those tariffs, the policy has not shifted to respond to that. And again, the policy stayed pretty measured, and the expectations for the policy to continue, I think, will stay. I think the structural and the macro problems for China go beyond the tariffs, and we know those are in place, and those need to be addressed by policy support, and that will continue. Will they make takes it all or kind of abrupt, very increased level of stimulus? It's unlikely, and they haven't responded again to that pressure. And the last and not least, tech innovation. Again, we had the DeepSeek, and that is already filtering through the Chinese economy. So I would say beta rallies, of course, supported by the de-escalation of tariffs. If we see additional fiscal support, we'll see potentially a recovery. But more importantly, places to pay attention is tech innovation, and certainly where the policy is going to be addressed, that in place like consumer, so benefiting more consumer, and certainly redirecting Chinese economy or a Chinese economy being able to be a lot more consumption-driven rather than investment-driven will certainly be the trajectory from here, and we'll see certainly companies standing in that space benefiting from it.
So on balance, I'm just wondering how you're looking at that rotation, because not too long ago we were talking about that rotation from the U.S. to parts of Asia, including in China. Is that still intact? I mean, what's the path going forward?
There wasn't a massive rotation. I mean, again, on the periphery, again, we've seen a derating of markets. But to say that China has benefited or some of the Asian markets benefiting from that shift of capital, it has not happened. So certainly investors have reassessed somewhat the U.S. risk, and we've seen, I say, derating across the assets. But there hasn't been a tangible shift into the ASEAN economy because, of course, they are subject to tariffs, and the uncertainties and the growth trajectory in Asia more broadly and China is still uncertain. I would say going forward, again, not just a story for U.S., we need to be a lot more targeted in places that stand to benefit from the growth trajectory, stand to benefit from the secular shifts and tech development, whatever that's in China or in U.S., which is still continuing. So again, being more granular in how we deploy the money is still the case. Again, beta rallies will happen, but those are not necessarily in scope considering the elements related to fiscal, monetary policy, and some of the trade tensions that are still very much in place.
How are you assessing risk right now? We talked about how equities in the U.S. surge on the back of the pullback in tariffs on China and the U.S. But when you take a look at the bond market, we saw an increase in yields as well. That shows trepidation and the uncertainty when it comes to flip-flopping of policies to do with Trump. I'm just wondering how you're assessing that risk right now.
Well, bonds are less volatile on the way down and less recovery. The beta recovery, it's on the way up, it's slower as well. So we've seen obviously bonds have done pretty much what they need to do during a sell-off. We've seen a derating in equities to a larger degree or a much larger scale than what bonds have done. And again, if you look at if you decouple the credit part and the rates part, of course, element of it. And I think credit has done a good job in preserving the value for investors. And going forward, I think credit stays in a good place. In absence of recession, and again, this positive news around tariffs, it probably eliminates that risk of recession. We might see a slight slowdown. But for credit, what matters, unlike equities, is that companies are able to repay their debt. We're not entering into a stagnation or a recessionary period. And that's looking increasingly the case. So again, credit stands to benefit from that element of it. Now, we are more constructive still on the shorter part of the curve in credit because we do expect some rates volatility in the U.S., again, driven by fiscal element of it, but also related to elements related to still inflation being a challenge for the Fed and for the U.S. economy.
Ecaterina, thank you so much for your insights today. Ecaterina Bigos, CIO for Asia ex-Japan Core Investments at AXA Investment Managers. India starts trading in about 4 minutes. This is how it's looking for its pre-market session. We have losses for the Sensex, currently down by 0.2%. We're also keeping an eye on the Indian rupee. Currently, it is gaining almost 1%. Bear in mind that rupee was under pressure during the conflict between India as well as Pakistan. Take a look where it is trading at this point in time. Again, India trading in about 3 minutes from here. Still to come, a setback for Philippine President Ferdinand Marcos Jr. as a rival Duterte clan does well in midterm elections. We assess the fallout next with De La Salle University's Institute of Governance. Keep it here with us. This is Bloomberg. You're watching Insight. Philippine voters appear to have delivered a blow to President Ferdinand Marcos Jr., with members of the rival Duterte clan outperforming expectations in midterm elections. Duterte-backed candidates are on course to win at least 4 of the 12 Senate seats up for grabs. That could help Vice President Sara Duterte, who faces an impeachment trial in the chamber. And reports say ex-President Rodrigo Duterte looks set to be elected mayor of Davao City, despite his detention by the International Criminal Court for alleged crimes against humanity. Let's get more details from our Manila Bureau Chief, Manolo Serapio. And Manny, pretty unexpected results.
Indeed, and that 4 seats, which was more than expectations, you said, does not include one senator who is currently a congresswoman and the daughter of the Philippines' richest man, who is, while she's part of the Marcos slate, she was also endorsed by the vice president late in the campaign, which obviously boosted her chances. And it's quite it's quite a blow, as you said, because the Marcos team was, at least based on pre-election surveys, was looking at far more than the 6 they're having right now, based on the early counts. And we also are looking at two re-electionist senators who are likely to make it to the top 12. And these are senators who were endorsed by the former vice president who ran against Marcos in 2022.
This was always going to be a proxy war between the Marcoses and the Dutertes. I'm just wondering what the implications are for the country and the country's politics.
That's what we saw firsthand, that it was a referendum for Marcos, a referendum for Duterte. But we also saw this as there was a group, as I was talking about, these 2 senators who were part of the former Vice President's Lenny Robredo's team earlier on, who benefited from this feud, sort of, because one of them is second in the early counts right now, and the other one is 4th or 5th. And basically, I think it's also speaking to, one, the declining popularity of the president, the incumbent, President Marcos, and also those who are maybe those people who have had it with the Duterte brand. But again, I think from the former leader, Duterte's showing that he's leading the mayoralty race in his in the southern Davao City, I think we're seeing a resurgence of the Duterte brand, because not only it's not only Duterte, the former leader, who is set to win, but also his sons.
Manny, thank you so much for that. Our Manila Bureau Chief Manolo Serapio there. Let's bring in our guest. Francisco Magno is Director of the Institute for Governance at De La Salle University in Manila. Francisco, good to have you with us. Firstly, the key takeaway from this election, how big a surprise was it for you?
Yeah, it should not be that surprising, considering that there was the unit team in 2022 when Ferdinand Marcos was elected by a massive majority. But that was a result of this unity between the Marcos and Duterte political families. So this is the midterm elections, 3 years after the 2022 elections, and there is the rift between the 2 political families. So as we can see in the early results, it's quite even. Instead of the big majority that the president is expecting, you have quite an even winning candidates from the candidates supported by the president and the candidates supported by the former president and the current vice president.
How much of it had to do with the role that Marcos Jr. played in sending Rodrigo Duterte, to The Hague?
Yes, we may credit the sympathy votes to Duterte. And so it translated in these current candidates endorsed by Duterte in the winning circle for senator. So that's really a big factor for pushing these candidates endorsed by Duterte.
As we look forward, what do you think it means for the political future for both Marcos and Sara Duterte?
Yes, of course, we are awaiting in the next few weeks, there will be an impeachment trial. So it's very important to monitor how the new Senate will respond to this big important event. And so it's very important for the president to be able to reach out, not only to his what we call administration senators, but also to the other factions. And but I would believe that what the president did in shifting away from Duterte, and in fact cooperating with the ICC is really part of the game. It's really to separate the administration that it is different from the Duterte government because it believes in international humanitarian law.
Well, as it stands now, indications are that Duterte supporters will make up at least 4 of the 12 Senate seats. I'm just wondering, does that change the prospects for Sara Duterte getting impeached? What are the considerations right now?
And so you need 2/3 majority in the Senate for Sara Duterte to be convicted. So this gain in terms of the support of senators who will be proclaimed is very important. So the game really now is to be able to get on your side the favorable support for the president, for the administration to be able to push for the conviction, and on the part of the vice president to be able to stay in power.
The results have shown that Sara Duterte remains widely popular. How would you rate the chances of the 2028 elections?
Of course, that would all depend on the result of the impeachment trial. Because if she will be convicted, then she will not be able to run in 2028. She will be barred from running. And so that kind of popularity has to be a factor already in the impeachment trial. But we have to understand that this is a trial, and you need evidence, and then it's being covered by the media. And so it's not just the popularity that will matter, but also the evidence that will be produced in this trial.
Francisco, it wasn't just about Duterte and Marcos. We saw the rise of an Aquino as well as a Pangilinan. How do you read that? Why that strong performance from both of them?
Yes, of course, these are returning senators because they have held positions in the government for quite some time. Of course, they were identified with the former Aquino administration. And we have to consider that they really put up a spirited fight. And in the surveys conducted a few weeks before the elections, it showed that former Senator Aquino and former Senator Pangilinan got very good support, good survey ratings from universities around the country, especially from the youth. And the Philippines is a young country, and we have a lot of young voters. And there was a very vigorous campaign against disinformation. As we all know, disinformation is now happening all over the world in electoral contests. And so the universities became a good platform for fighting disinformation. We have to consider that these two candidates were actually at the receiving end of all this disinformation campaign.
Francisco, thank you so much for your time today. Francisco Magno, Director of the Institute for Governance at De La Salle University. Now, before we go, here's a look at our show tomorrow. S4 Capital Executive Chairman Martin Sorrell will be joining us to share his views on the U.S.-China trade truce, as well as the outlook for advertising and digital media. Plus, the latest on markets with Saxo Chief Investment Strategist Charu Chanana. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.